This is your mortgage rate watch for Monday, February the 28th, and I'm Keith Akada with the Mortgage Reel. Taking a look at the bond page this morning, we're definitely hitting a ceiling of resistance, which means how much better rates can improve from here. With this week being light of economic data, really we're looking at what's going on with the Middle East as far as the crisis there and everything that's going to play out through that. The one thing that we are going to say that is right now the U.S. bond market is still a safe haven. So the market could see this week, because of light economic data, anything that happens in the Middle East to be a benefit to the bonds and the mortgage rates. It can clearly be attributed right now for the rates that we've seen improve over the last now 13 days is due to the middle crisis in the Middle East. And one of the things we want to make clear here is as things unfold there, and if good developments do come out as far as news from there, we will most likely see rates trigger back down toward the lower side, because lurking behind the scenes is good economic data still coming from the United States. We have the job/unemployment report coming out this Friday, and if any of these numbers show us continued optimism in the United States as far as the economy, then that is going to pressure rates. That once these signs from the Middle East do start to ease, it's definitely going to send the investors back overseas, and that's going to come at the expense of the bonds and mortgage rates. We're going to keep today short and sweet, but we just want to talk a little bit about inflation. You know, we continue on a daily basis to talk about what's going on with inflation, but just bringing it home to a local level. Not only are we seeing it at the cost at the pump, this weekend was a staggering surprise here in Seattle, Washington, when gas prices were up almost 5 cents on the gallon. But another thing just to look at for myself as a family, we went to our local restaurant that we always do a weekend family lunch at, and it's a Vietnamese restaurant for pho noodles, if you guys are familiar. But the most interesting came from in a conversation with the waitress and also with the owner, is that we asked for limes, and they said the limes are too expensive to give out. So if they do give out limes, they have to increase the cost of the noodles. From their eyes, as far as questioning customers from a franchise level, they decided not to do that, and they're giving out lemons. Well, if you know anything about this type of food, lemons don't really go well with it, but at the expense of having to buy limes, they decided to get rid of the limes, put in lemons as a substitute to keep the prices the same. Now, where we're not seeing that the same is unfortunately just on the package of yogurt. We went grocery shopping right after, and here it is, yogurt was up almost 13 cents per each item. So it's very interesting to see how inflation is already taking its foothold in the economy, yet most people aren't really seeing it yet. But definitely, if you start paying attention to what's going on with your restaurants, anything that has to do with the cost of goods, everything is slowly increasing, just as we see it right now from the prices that we had just a little less than 30 days ago. Make sure to check the homepage of Homeowners Education 101 on the increases of the credit risk pricing that was just implemented by Fannie Mae and Freddie Mac, and how that impacts any current or future homeowner that's thinking about either refinancing or purchasing in the very near future. Leave any comments or feedback below, as it's not only appreciated by Team Mortgage Reel, but also by current and future viewers. Join the conversation on Facebook at How to Beat the Banks, and like us when you're there. Otherwise, we'll be back tomorrow with more updates on your Mortgage Rate Watch.